Welcome back. Hope you're having a good morning. Well, the SGX Nifty is suggesting that at least to kickstart trade, we'll have some green on the screen. Remember, on Friday's trading session, we ended at the low point of the day. But we ran you through our top 10 stocks that we're tracking today. And let's discuss some of those with Prakash Diwan, a market expert who joins us on the show. Hi, Prakash. Good morning. Well, plenty of stocks in news, but I wanted to ask you about Dalmia Bharat. They're walking the talk, right? They promised that they're going to be getting out of all the non-core businesses. This is a stock that you like. How do you read this news flow? They'll get close to around 800 crores for exiting that stake that they had in the refractories business.
Oh, absolutely. Good morning, Nigel. So I think it's a very positive move, very much aligned to the kind of commitment that the management has articulated in the past. And interestingly, it's being hived off to the promoter group, which means that if you're okay with that related party transaction being at fair value and all, I think the market will take it positively, because this is a time when most large cement players will need to be very agile on the balance sheet, will need the firepower to be able to use this money to expand in the right geographies and incrementally compete against the bigger ones which have already started raising capacity. So from that perspective, this helps Dalmia not only throw its hat in the ring in terms of the big players matching up with the big players in a lot of ways. It also makes it very capital efficient. So I think it's quite positive, and this is one of the reasons why I always like the company. They've always utilized capital very effectively. We've had no accidents in the past as well. So this should augur well for the stock.
Okay, Prakash, good morning. Hope you had a good weekend. The stock that I want some perspective on is Sun Pharma. We've got this news on this ransomware attack, and I think the thing is that there's no clarity on what the immediate fallout is and how much money is going to be invested in shoring up the IT systems again. But, how would you look at things? Because also the stock hasn't fallen too much. It's just some 10-11% off the 52-week high.
Good morning, Surbhi. So I think it's very clearly something which may not be very, very negatively impacting the stock, given the fact that if you see the trend of US FDA inspections and some of the other regulatory agencies, including from the UK and all, there is this positive salience coming back on at least the outcome of these inspection activity. And that's all thanks to the last 5-7 years of very, very strong struggle that most of these companies have gone through, the challenges they've kind of overcome in terms of delivering with the process integrity. And that's the reason why pharma as a pocket is probably what I feel will be a safe haven, and people will want to kind of start allocating more to. The good part on this particular news flow is that IT companies could look at a lot of the pharma names, the big pharma names for additional business, because this is going to get much more commonplace as we go. But I don't think this impacts Sun's ability to continue expanding some of its newly launched products, especially in the US market, and where they have a very strong hold. And their subsidiaries have also started kind of revving up on margins, which has happened after a long time. So I think it's positive. But Sun is not my top pick for an obvious reason, because the optionalities attached to some of the other businesses where things could make significant differences, like of Lupin and Cipla and all, rather focus on that. But yeah, this particular news flow might not be so debilitating on the stock.
Prakash, hi, good morning. Now let's pick up two sectors from last Friday. One is the asset management space. Not too many names, but there are a few. So do you think there is more damage here with what was done? And the second is NBFCs, broadly speaking, because there is some concern that cost of funding will go up, because NBFCs many were dependent to varying degrees, between 20, 40, 45% on debt mutual funds as a source of funding. So with lesser inflows into that category, maybe they have to go to banks to borrow, but at a higher cost So your thoughts, both these spaces, AMCs and NBFCs.
Yeah, good morning, Prashant. So you're right. Some of the aftershocks of this particular change in taxation treatment for debt funds is going to start reflecting in the second order, third order impact. And from that perspective, if you see on the NBFCs, I don't see any reason why. See, first and foremost, let's understand debt mutual funds had a very strong preponderance of highly rated, high quality rated paper. We would rarely see things which are below AA plus and all, except for some of the opportunistically built portfolios. But those companies which have good ratings will probably definitely find takers maybe in the direct bond market. In fact, what this is going to do is it's going to start getting a lot of the intermediaries to start building portfolios around direct acquisition of bonds by large investors, especially institutional and HNI investors, not retail maybe. But that's a corollary, or that's a fallout of this particular move. The second thing on the AMC businesses as a whole, while there are brokerages anticipating this may not impact AUM growth, I don't see why it will not impact AUM growth. In fact, the move to FDs is just going to get accelerated as we see interest rates perk up. We've still had a little bit of a transmission gap. But the moment interest rates inch towards that 10-digit mark on FDs, you'll probably see a significant churn in debt fund portfolios, and that is something which takes away a huge component of the income flow. So it is going to have an impact. The Friday reaction was probably immediate and knee-jerk in that. I mean, was more immediate, not knee-jerk, but more immediate and hence sharper. It could be more calibrated. But I don't think it's going to be on the reverse side. It's not going to start turning favorable just because some clarifications have come through. So it's best to stay away for a while, see what kind of where it settles down, and then probably evaluate them in the new regime of the business model itself.
Okay, so that's